it's a good team.
All right, welcome back to another episode of Chart Talk. I think this is episode 41. We're going to go over some market outlook, some of our best and worst trades of the week, some member-submitted questions, some social media submitted questions. We got book of the week too. Bennett, what do you got for us?
I do have one of these little, let's see if you can see it. Got a little canvas I think we should give away to one of our people who watch this video. What do you think, Shaker?
And how do they win?
I think we'll keep it simple. We'll say what? Someone drops a thumbs up. They drop a comment of something they learned from this video. Hopefully there's something educational from it. And then if they share it on their story, on their Instagram story, and then we'll obviously see it. And then let's say by the close tomorrow, we'll pick one of the winners, and then we'll mail this guy out. And I think we got a couple of these little stress balls that we can drop in there as well.
Free swag.
Yeah, why not? Got a bunch. So with that, Shake, you want to jump into the market outlook?
All right, let's jump in.
All right, let's do it.
Yeah, so right now, we're just seeing this market continue to grind higher. We're seeing some absolutely exuberance out of NASDAQ names. NASDAQ now like 4% off all-time highs, 6 straight days up. So anything digital, anything internet-related, internet sales, anything speeding up the technology transfer into kind of the new age has been going absolutely nuts, probably more so than it needs to right now, but don't fight the trend. We're seeing a vicious uptrend right now in these tech names. What do you got?
Yeah, Shake, if you pull up that chart I sent you over, goes right along with your thesis with the NASDAQ. Trend's our friend. Really anything above 9,000, NASDAQ's fully fine. I think for most, no one would really have ever assumed we would have gotten back to this high as quickly. And then, just with the S&P has been lagging relative to NASDAQ, and we've talked last week about this 296 kind of 300 area in the SPY, which has been some significant resistance for some time. And again, similar steep up trend where right now everyone's kind of in limbo. They don't know what to do because we're kind of dead smack in the middle of this range. So it's definitely been much easier to focus on the tech names.
Yay.
All right. With that, you want to jump into some of the member ideas?
Of course.
All right. So first up, we got Daniel. He's looking at this INMD through this 30 area.
Yeah, it doesn't look like it's through this 30 area. It looks like it was kind of today through this like 27 area. It was like a nice entry. We'll see how it gets up to that 30 area. Pretty decent base ahead of it.
And the other name he's looking at was Humana, this HUM through those highs.
Yeah.
387, 390 area.
Yeah, this is a pretty nice level. Healthcare has been really strong. This reminds me of TMO, same sector, similar name. So both setups are there. It looks nice. If the market continues the way it is, this should be fine.
Okay. Next, Kyle McCopper had more of a broader question on overall portfolio and percentages of names to put in when it comes to diversification. So maybe Shake, if you have like some input on how you allocate some of your money in your account when it comes to day trading, and if you want to take a little more broader approach.
It depends kind of my sentiment on the market, how much risk I'm willing to take type thing. I don't know. I don't really have a black and white answer. You can take the reins on this one.
All right. So Kyle, there's like a very common story that we'll jump into real quick about diversification. So say you live on an island and there's 2 different companies you can invest in. There's an umbrella company, the other one is a swimsuit company. When there's a rainy summer season, the umbrella company does very well, the swimsuit company does very poorly, and then vice versa. So you have the option to either invest in one of the 2 or both or neither. If you invest in one, if it's a rainy season, you invest in an umbrella company, you do really well. But if you don't and it's very sunny, the company does very poorly. So it depends on your risk tolerance. If you want to put a bunch into one name, you can really hit it out of the park or get really banged up. And if you kind of spread this money around into 5, 10, 15 names, you're not going to have these home run returns, but you'll have much more safer, closer to average market returns. Again, this comes down to personal preference. There is no real black and white answer. A good rule of thumb usually is to try to keep it under 15 positions. After that, it tends to just get too bloated. And if you just kind of take that allocation, you'll figure out whether you're the 1 position guy or the 15 or somewhere in the middle. And again, that usually comes with time. So hopefully that helped answer your question on diversification. Next up, Shape, we got Greg looking at this MU through 50 micron.
I personally don't love it. It could use more consolidation to me. I mean, it come 1, 2, 3, 4, 5, 6 days up, just like Nasdaq. So there are a lot of good-looking charts right now, but it's like, is it wise to buy them on the 6-day up? So most of these things like that fall in the tech space generally need some sort of consolidation. So it could be good in time, but not yet.
Next, we got David Kivlin. He's looking at this Domino Pizza DPZ through that 380.
DPZ, best performing stock over the last like 20 years. Yeah, I mean, you can't be mad at this. Great reaction to earnings. Third time going after all-time high level. So technically, yeah, it should be fine. I mean, it's up a bit on the year, but, you know, it's a leader, and who's to say it can't go higher?
And then the other one was his SDGR through 52. Oh, actually,
this
it already
name,
went.
This name got my number. We bought this April 20th here and got shaken out this day, and it just went like 30% without us. So yeah, it's up like 3%, 4% from where he said. So I guess it's a good buy.
David, we hope he got it. Next, we got Tommy Bridwell looking at J&J through that 150.
Oh damn, this thing is tight. Nice daily action. Yeah, I like it. Could just be a little mini base before it wants to attack highs again. Makes sense. Healthcare strong.
And then the other name was this ZTS through that 127, 128 area.
Yeah, it looks good. I like that. Against these support day lows. I mean, against earnings day lows. Yeah, that makes sense. I like that one.
Next, we got Colson. He's looking at ONEM.
Yeah, they have earnings. They have earnings May 13th, so yeah, perfect chart, but we'll see what earnings have to say.
All right. Let's see, GFL through 18 recent IPO.
Ooh, trading experts alert was 1550. Yeah, it looks pretty good. They have earnings yet? Earnings are today after the close. I don't know. I didn't check out the earnings, so it depends on the earnings, but it's a really nice chart. You love IPOs taking out that initial high.
And then last on his radar was his ILMN.
Illumina, huh?
320.
Yeah, it looks great. Nice little uptrend, sideways continuation flag. Looks to go higher. Makes sense.
That's good. All right, next we got Golem, Amgen, AMGN through 244.
It looks good, but it was it was up $8 today, which makes it tough. Which makes it seem like today was the day to get in. So yeah, it could go higher through this area. However, you have to recognize the move that it's already made into that area. So buying it tomorrow is tough. Expecting to see results right away.
Yeah. Next, he's looking at another farmer name is MNTA through 35.
Damn, this thing is absolute tear. This MNTA. Yeah, I mean, the market's got to continue making keep this uptrend. Right now, every chart's going to look good because Nasdaq's been up 6 days. So all these charts going to look good. It's just like, will the market have that follow through? So all these charts are looking great, but I'm not dying to put on new risk in this area. I have a bunch of swings that I'm holding and things like that. I'm not salivating at any charts right now.
Okay,
it looks good though.
Yeah. The last one he's looking at was this GSX tech company through that 42.
GSX. This one needs more time to me. It just kind of simply just needs more time to consolidate.
Yeah. That almost kind of reminds me like Nike, when Fox was looking at it like 2 weeks ago at 90, it was just like it just needs some time to just go sideways, and kind of similar trend with that.
Yeah.
Let's see. Next, we got Alex Smith, AIG. Oh my God, this name.
Nice little base. Financials aren't really the place to be right now. But, I mean, if it breaks its base higher, I can't really argue it. Earnings out of the way. A little bottom bounce setup. I get it. Kind of counter trend, though. I'll look to sell this one if I bought it here into this, 38, 40 area. But, it could move higher.
Yeah. I like the charge. I mean, I like the little setup here through 28. I just hate AIG as a company. So it's like, for me, I just can't touch that one. Right. Let's see. Next, you got this AVAV 63. Kind of went a little bit today. He said this earlier.
Decent little base. I'll give him that. It did go a little bit. The name is pretty well off highs, which I don't love, but I do like this nice little tight consolidation area. It's trying to break above. But you probably, if you buy this one here, you probably have to give it the 60 area maybe it's 57. So you got to give it some kind of room.
Next, we got Joe DeFrank. Sorry. And he's talking about this ping, but he's actually already in it. So he bought it up through 25. He was actually selling some into the close. He just emailed me. So I guess he's looking for it to retest that prior high through 30. But he was just surprised. He was kind of shouting you out. He's like, "Oh, this wasn't on the shakedown." He was expecting this to be one on your radar.
Oh, shit. Sorry, I'm not God. Shit. Looks good. Looks like it makes new highs. Congrats.
I'm a god.
You're God.
I'm a god. I'm not the god. I don't think.
Tommy Branner, or Mini Livermore, he's looking at this BMRN through 100. Very big base going back.
Oh, yeah, this Biomarin looks like it's finally ready, especially with Biotech Strong. This is a pretty monstrous base setting up since 2016, so it looks pretty good. If it can finally overtake this 100 area. The problem is, back in 2016, 2017, when this base was first setting up, we were like pretty obsessed with the name, and then it took learning how choppy the name really is. You can look at the individual candles. It's up like $9 or $10 every day, up and down $9 or $10 every day. So when it will make that move through that 100, it'll probably be great. But I'm not buying 100 on the nickel when it triggers, just because I know how choppy the name is. You have to give it a lot of room type thing. We could see in the last few days, 85 to 100, back down to 85. Now it's almost testing 100 again. So you just kind of see the volatility you're going to ensue with that name.
Yeah, it's definitely going to be a crazy one. But again, this reminds us like what was it? Shake Shack. Like Shake Shack had that really big base and it took so long for it to finally go. And then when it went, it had that run from 30 to 100.
Something like that. Yeah.
And it goes through 100. It maybe takes 6-7 months to get back to 150, but it'll get there. But again, like you said, those moves from 100 to 80, 120 back to 90. Those hard moves, which it's easy to look back and say, oh yeah, I'll hold it to that. But realistically, when you're in it, it's much harder. So after Tommy, we got Michelle's looking at this O'Reilly through 403. 403.
Nah, I don't like this. It's gone parallel off lows and hasn't at all rested. I mean, just look at this is a true V, and if I bought this bottom, I'm selling into this area. This isn't the area I'm looking for more continuation.
Yeah, I'm with you on that one. And the other names we already talked about Humana. He did have a question for you, Shake, about when it comes to intraday trading. Where are some places you look to place your stops in your day trading?
Does he have, is there a name I could look at?
Just kind of like he's been trying to.
We generally use low of day as the buffer for a day trade. For a swing trade, I'm trying to find true support, but for a day trade, I'm just mostly using low of day. Or if I'm buying off like a 15-minute pivot or something, it can go below the pivot. Things like that. I mean, very general and basic.
And let's see. Kristen, the names we're going to skip, they're not worth it. Next up, we got Will Thompson, CDNS. He's looking to buy 84.
Pretty much same as at O'Reilly's. I mean, it's just like absolute V'd up to highs. That's not a name I'm looking to get in right now.
Yeah, a little late. All right, so we wrapped the member ideas. We'll jump into some of the social media questions. Not too many today, so not too many disaster questions.
All right.
We got Jake Lundstrom is looking at this PFE through 39, verse 37.
So this is like a little earnings flag forming, and people want to buy PFE right now because their name has been attached to some sort of corona drug, some sort of treatment. I'm not exactly sure there. So I'm watching this develop along with them. It could use a little more sideways. It's kind of similar to those names, that O'Reilly and that CDNS that we just talked about. We're just kind of V'd very quickly, but we're going to see a lot of names like that right now. So we'll see how this one develops. If it gives us more sideways, yes. If it goes tomorrow, then no.
Gotcha. This actually, 39 has been pretty significant area of resistance and support, going back to almost 2018. So it's been somewhat of a battleground in the name. It'll be interesting to see when it goes. Let's see what else. Okay, Brandy Cohn, one of our younger guys. Looking at his OC through 45 verse 40.
Yeah, looks just like that AIG, just another financial name. Pretty much all the financial names are very similar to this. You know, you type up the XLF, very similar. What name was that just? Fuck it. Million.
OC.
Yeah, so I mean, you know, if the XLF decides to break that higher, I'm sure all these financial names get that bounce. Kind of similar setup here. Yeah, just not my favorite trade, but the setup's there and it works out. So keep an eye on it.
And then going off, we've been kind of on this financial topic. Jordan Renner is looking at this USB through 34 versus 30.
This is the weakest of any financial that we saw whipped up. You know, I'd rather buy the AIG over this one. This one looks like it's knocking on another move lower.
Yeah, and not even that. I spoke with him privately. His main thing was, and this part I left out. I'm sorry. He wanted to buy 34 versus 30, but his target was 38. So he's risking 10% to at best make 10%. When really 38 is kind of that resistance level that we'd want to eventually see break and this thing move higher. So the bigger red flags, other than this being one of the weaker financial names and being not that good of a setup at all, was the 100 risk reward, and then looking to sell into a spot that we would potentially be looking to buy down the road for that move from 38 back into the 50s. So there was kind of a lot with that trade that I told him we'd go over in the video so we could kind of pick a few of those lessons to learn from why we wouldn't take this trade. And then after that, one of the last social media questions was from Garish, and he asked, what sector are we focusing on lately?
As I mentioned, I mean, anything tech has been going crazy. You look at Shopify still making new all-time highs. You know, you look at stocks like fucking Wayfair is up 800% in the past few weeks. So, I mean, anything tech-related or, you know, new age-related has been pretty feasty. And then anything, you know, in the financial spaces I keep pointing out is just, you know, kind of lagging the entire market's move. So I haven't really been staying there. But, I mean, today in the NASDAQ, we saw 6 days up, and then we saw some weakness end of the day, which could signal some sort of sideways action. So, you know, always looking all over.
Mm-hmm. Yeah, so tech's been leading, biotech's been, you know, second place, you know, healthcare third place. Those are like the top three. And then on the flip side, you know, you have like the energy names, you know, that have been, you know, the energy, some of the financial names, things that we've been trying to avoid. So those have kind of been, you know, for stronger weak sectors. That's kind of where our head's been at. So with that, Jake, we can jump into some good trade, bad trade. Do you have any trades you want to go over?
Yeah, I mean, there were a lot of winners in tech last week. This Intel we bought up off this support area 56. Still rocking along, looks very good. This Snapchat, you know, I added off this 1650 17 area. Bought this initially, added off this 17 here. You know, that one's still rocking. I took a little bit off the table today. What else we got? This Spotify, man, wish I held out to more stock here. We were buying this little the pull in off the big earnings move. It has this monstrous level overhead that we're positioning ourselves for. I just didn't think it would get up there that quickly, so I don't have as much stock as I like. But it looks good going forward. Still rocking this team. Trade of the week last week. That one was just like, you know, you buy the new high, just absolutely feast move. And what else? Oh, this work. I'm still in this work. Support bought this work. Here we go. Up off, and now it's just kind of working higher, trying to turn this 30 area into new support. So, you know, we're seeing a lot of names go, but, you know, this run could be slowing down. We need some sort of consolidation in the indices. What have you been trading?
I have three charts that I emailed Jake Van Pulp. You can start first with IBB, since it kind of goes off that question that Garish had. If you want to pull that up once it's up, just let me know.
Yeah, it's up.
All right. So, again, we talk about just broadly when, you know, most people tend to do the opposite. You know, when the market's pulling in, most people try to get out, and then when the market's rallying, most people try to rush in. So for myself personally, towards the middle end of March, I think I was a little bit early getting back in. I was dollar cost averaging in a lot of the sectors when most of them were quite weak. And IBB was one of the ones that so far has worked the best when, you know, as it was pulling back into these new lows, I was buying up through this $100 area when most, you know, the newer traders wouldn't necessarily be looking to buy that. And now on the flip side, when it does turn around and it is working its way back to new all-time highs, this is when the newer trader tends to kind of rush back in. But luckily for myself and the guys that bought in with me back in the middle of March, we can now sit and be much more comfortable in the position without having to be as perfect trying to buy the 128 IVB. We can buy the 100 and hold this move. And when it goes to 150 or 200 down the road, we can look to take some profit. So that was just playing a little bit of defense when it was a little bit harder, and now it's kind of paying off. So that was one of the sectors that's been working very well. And the other two trades, again, we talked about that Intel that you brought up. Shake, you want to pull up that chart? I kind of mapped out a little bit.
Yeah.
All right. So again, you spoke before. You got Intel up?
Yeah.
All right. So again, the opportunity's been keeping an eye on this Intel. We've been looking at this 62 level, but again, in a name like Intel, we're not trying to buy 62 versus 58. Just like we spoke about earlier with that USB, we're not trying to risk 10% or 8% in a name like Intel. So we can see very clearly, all of April, that 56 level of support is held, and when it had this little 3-day pull-in, we look to buy that first day back up. And so far, it's been working. Just grinding. It's a very slow name. This isn't like a crazy, tech name that's going to move, 10% in a day. So we're just positioning ourselves for that 62 breakout in time. And then lastly, this Disney, similar story, of what we've been focusing on. And there's two main points. Shake, once you have it up, let me know. And
Yeah, it's
I'll
good.
dive in. All right. So the first one you can see, if you look at the green little circles, again, back with IBB, we were talking about. I was trying to buy a lot of stocks that I really liked in the middle of March when everything was really looking not the best. And again, didn't really get the best price in the time. Again, no one's really buying a low. And I was speaking with Carl about this before, about dollar cost averaging into the position, especially his MNRN, where he's up like 400%. Where when we do dollar cost average, when you can dollar cost average on the way up, like for example this Disney, buying this 96, and then eventually buying 104, dollar cost averaging on the way up, meaning that this stock is moving in my favor and I'm adding to the position without having to give away good stock. So, we saw it start to flag again, similar to that Intel. We saw that 100, 98 area holding as support. And I added up through that 104 versus it, increasing my average in the name. And I'm still looking for it to eventually break that 112, but now I don't have to be perfect buying that 112. I can sit and kind of buy on these pull-ins and continue to increase my cost base as this name trends higher, if it does. And if not, you just keep moving your stop up to your break even, and it doesn't work, you get out, you don't lose much. But that's been that main theme so far for us, has been buying up off of support versus trying to buy those resistance breakouts and being perfect in them. But yeah, that's all I got for good trade, bad trade. Shakes, if you want, we can jump into top idea of the week.
Sure. I'm looking at, I think this ABC is finally ready. Earnings out of the way, looking to come out of this base. And if you zoom out, it's an absolutely massive base. I'm actually gonna buy this for the long-term account. I'll probably actively trade it too. But if you zoom out, this base has been forming since 2016. Looks super ready to go. So if this is able to break out, I'm anticipating a big move. But over the longer term, there are a few others, but I'll save it for our boys. What are you looking at?
I think
girls and girls.
and ladies, sir. The one main one I think is this CNC. I think it's been setting up pretty nice. Again, it's a little hard to buy that 68 tomorrow. I was expecting it to be good, but I do think it's one to keep on the radar. Where if maybe it pushes to 67, but it stays in this 69 or 64 range, get some type of entry to again push back through and get back to that 74, and that'll be a level down the road that I'll still be looking to buy, but at least here you can start to nibble in and build a position in to be ready for that 74 down the road.
Oh, all right, makes sense.
All right. I think with that we'll jump into book of the week.
All right, let's jump in. All right, book of the week. Bennett, what do you got for me?
So I've actually been stealing a lot of your recommendations.
Fam, if you just give me another book that I have said last week or 2 weeks, yo, come on, seriously.
It honestly was a really good book, though.
What was the book?
Where are the Customer's Yachts?
You're trash. You know, the point is so that people get a reading list from, like, it's not just a recap whatever book I've been reading.
Well, the book I read last week wasn't that good, so I had to pick up something good. But this one was, there's a couple of quick little lines from the book that are very, very good. Let's see. One of them was, to function properly, the market has to allow price to fall as well as rise. Most people hate hearing that. They only want the market to rise. Another one was, when the crashes come, it's people with the most leverage who get hit the hardest. That's why we don't use margin.
When the tide goes out.
Yeah, everyone, you see someone naked. And then the last one that was really good was, many people find writing their winners as one of the hardest things to do. And that we'll touch on, and that we touched upon in the Good Trade, Bad Trade before. But yeah, Jake, you did recommend a good book. Super easy, less than 100 pages. So what are you reading that I can steal off next week?
This is actually fire. I just started this. 50 Cent came out with a new book. It's called Hustle Harder, Hustle Smarter. And he pretty much just goes through all his different business ventures. Like, he has a ton that people forget about. He did like a $100 million deal with Vitamin Water. And he has all these different business ventures that he talks about. And he must have had some like brilliant author co-author with him, because he sounds straight up eloquent in it. Like, the grammar and everything is perfect. It's beautiful, beautifully written. Really. So I only started this today, but it's actually really good and really captivating.
Nice. All right. I think with that, we wrapped it up. Until next week, guys. Good luck. Happy trading.